Alrighty guys, so in this follow-up video to charting support and resistance, in this video, all I'm going to be showing you is looking for volume to come in off of these key levels using the hourly time frame. Okay, so in my experience, I know when I first started out trading, I really did ignore the hourly time frame. And to be quite honest, the longer I've been trading, the more appeal I find in using the hourly time frame to my advantage. Okay, so it's no longer a time frame that I overlook anymore. In fact, there's been many trades that I've taken that have turned out really well just using the hourly time frame. Okay, so yes, of course, bigger time frames will always be more dominant and stuff like that, but definitely don't overlook using the hourly time frame to your advantage either way. Okay, and so for this video, I'm just going to be walking you through Fubo on the hourly time frame from the past couple weeks, and I'm going to be going over some key levels and looking at volume and patterns and stuff like that. Okay, so real quick, we have 2274 marked off for Fubo right here on the hourly time frame. We can see that a double bottom was made right here off of this key level. And now if you haven't watched the first video, please watch the first video because that's where I go over this technique that I'm going to be talking about right now and how you can look for that yourself. Okay, but we see the two touch rule came into play right here. We have one bounce right here and we have one drop right here. So that we have two touches right here. That's at a minimum for what we are looking for. And we have that right here. So we can mark 2274 off of, or using this technique, excuse me. Now, what I really want to hone in is this hourly candle right here on October 4th. It's the 11 a.m. hourly candle. Look at this candle. Okay, if you just look at that candle, and let me change my cursor here real quick to the arrow. We've got a long bottom wick right here for this Fubo hourly candle. Okay, so there's clear buying pressure right here. There's some selling pressure. You know, it's a red candle to begin with. It has a top wick, but the bottom wick is what really sticks out to me. Okay, the bottom wick is what sticks out to me because it's a long bottom wick and there's clear buying pressure that buyers stepped in and they pushed price back to the upside, and then it kind of chops itself around above $23 for the rest of the day. But notice where buyers stepped in again. They did not let price go below the previous low that it saw on September 29th. Now, looking at this hourly candle from October 4th, follow the volume bar down. A big volume bar. It's the largest volume bar that Fubo saw during the entire trading day on October 4th. Okay, to get a volume bar like that and kind of towards the middle of the day, you know, it's 11 a.m., it's still early in the morning, but volume is definitely starting to dry up as we head into lunchtime. That's a really strong indication that buyers did step in and they did not want Fubo to go any lower. Okay, now fast forward a few days here. Let's look on October 6th right here for Fubo. Fubo begins to break out. So you could have went long, noticing this double bottom right here using the 2 to 3 touch rule for Fubo. You could have went long off of this trade and it would have chopped itself up for a day. So you just would have had to have held for one day. And then finally on October 6th, Fubo starts to break out to the upside. For a mock trade, an ideal scenario that you could have went is use the stop loss as 2274. Okay, so using the 2 to 3 touch rule, we identified a key level right here for Fubo. And keep in mind, this is all with no indicators, by the way. I don't have any indicators on my screen. These are all mock trades that I'm going over. No indicators involved. Okay, so double bottom identified off of 2274 using the 2 to 3 touch rule. We see volume came in, so buyers are there to keep Fubo up. Here's your price target. If you went long and you used 2274 as a stop loss, if you went long using the 2 to 3 touch rule to identify resistance, we would then identify 2446 as our resistance, okay? We saw a rejection right here. We saw another rejection and then a gap down the following morning, so clearly that was a key level to get over. And then finally, on October 6th, the day that Fubo ended up breaking out a little bit from the low of October 4th, you can see there's some rejection there into close. The 2 p.m. candle and the 3 p.m. candle from that trading day get rejected right there. But then, of course, the next day, October 7th, Fubo rips to the upside. Okay, so here's another key level that we have marked right here for Fubo at 2446. However, this is something I want all of you to keep in mind. If you missed the initial breakout of any stock, what I want you to do is keep an eye on it because there's a very good chance if you miss the first breakout, which is what Fubo saw from October 6th into October 7th, there's a good chance the breakout isn't done yet. Okay, you just have to keep an eye on it and wait for the move to continue. You need to look for continuation patterns. And that is exactly what Fubo ended up giving us on this day. So if we look at Fubo right here, What we actually got is an hourly bull flag for Fubo to break out. Okay? And Fubo flagged for 2 days before it finally broke out to the upside. Okay? And this bull flag, I'm trying to change that trend line a little bit there. Okay? Here's your flagpole for Fubo right here. And now here's your flag. The breakout started on October 6th. Now keep in mind, that's okay if you miss it. Just keep it, or you need to watch it now for any continuation patterns to the upside. And that's exactly what Fubo gave us from October 7th to the 8th. It formed a bull flag for 2 days, okay? This was a bullish breakout continuation pattern to the upside, and then you can see real quick, before I start getting into volume again, look at the breakout Fubo saw to the upside from this bull flag. Okay, it breaks out on the 11th, chops it up again for the 12th, finally October 13th into October 14th, it rips to the upside. Okay? Now, here's your bull flag. Now, when do you know when to go long potentially for Fubo? Okay? Well, you have a trend line right here. You can draw this trend line just like this. There's your 2 touches. Boom, boom. There's your trend line to draw for your 2 touches. Now, let's keep drawing this trend line out. Okay? This hourly candle right here is really important. It's the 1 p.m. hourly candle on October 8th. We have a key level marked at 2446, so round up to 2450 as a key psych level because psych levels end in 0 or a 5. We have a key level right here, key psych level, key SNR level, whatever you want to call it, right here at 2450, 2446. Buyers step in right here at 1 p.m. on October 8th. Look at the volume that comes in. There's actually no volume that comes in. Actually, let me change my cursor here real quick so I can see this real quick. Much better. Okay, so this volume bar isn't a lot, but it isn't low either. Okay, so if you look down here at the bottom of my screen where my cursor is, the noon or the 12 o'clock volume bar, very low volume. Very, very, very low volume. However, volume comes back in again once price bottoms a little bit at 1 p.m. So now you have price action confirming that, hey, the bottom may be in for Fubo right here. There's a little bit of a bottom wick, but the candle overall is pretty overall bearish still. So you keep an eye on it. Well, look at what Fubo does, and I'm going to bring my chart out a little bit better here now. Now look at the rest of these hourly candles for Fubo. Okay, 2 p.m. and the 3 p.m. hourly candle, look at the volume that comes in for them. Okay, especially this 3 p.m. candle. It's one of the largest volume bars of the entire day for Fubo. Look at the candle too. It's a big green candle. It's a bullish candle. It has volume coming into it. That's what you want to look for to swing positions overnight or over a weekend. Okay, when you get a very nice bullish candle and then volume ties into that candle, if that bullish candle on the hourly time frame has volume, that's a nice conviction, or that's a nice piece of conviction to go long overnight at least, or over the weekend, whichever one it is. Okay, you have volume coming in. Of course, it can always be wrong, but nothing in the market is ever a guarantee. Okay, I'm always going to preach that, so you know that ahead of time. But now tie that in from just this one hourly candle. Tie this into the setup that we've identified. We've identified a bull flag breakout that's coming. Price did bottom and reversed with decent volume. It's not a lot, but it's decent volume. And price did reverse. We can see price action reversed. That's enough conviction to go long and to swing calls over, it looks like over the weekend, because we go from October 8th to October 11th. Volume comes in at close, and then boom, look at what ended up being October 11th. We break out above this key level because that's where price got rejected at on October 7th and October 8th. So we have identified a key resistance level to get over. Price is bull flagging underneath this key level. That is huge. It held above another key support level. So price is bull flagging between a key resistance and a key support. Now look at the close. This is the final tie-in to look at the swing calls for Fubo in this hypothetical trade. Look at volume come into close. It has a bullish close. You can swing calls. Look at what comes Monday morning on October 11th. Fubo breaks out above this key resistance. 26 calls if you would have swung them, because it looks like Fubo closed at 25.12. So if you would have swung 26 strike calls for Fubo, they would have been in the money come Monday morning. Okay, so I really want you guys to start utilizing volume and utilizing these smaller time frames. This was just a mock trade scenario video of how you can use these smaller time frames to your advantage. Okay, now of course don't forget, or always remember, nothing is ever going to be guaranteed. in the markets, okay? So if we look back right here on October 1st for Fubo, October 1st was a Friday, Fubo has a very bullish close pushing a key resistance level right here. Look at the volume bar that comes in. One of the biggest volume bars of the day for Fubo into a key level. Fubo ends up gapping down on October 4th with the broader overall market, okay? But what's the difference between this gap down and what we see right here for Fubo again as Fubo on October 8th runs it up into close with high volume? There's no bullish pattern right here. I don't see any bullish pattern. I don't see a bull flag. I don't even see an ascending triangle. Nothing. I don't see any bearish or bullish breakout pattern right here for Fubo. However, from October 6th to October 8th, which was a Friday, we see a bull flag breaking out, or trying to break out, into close with volume. Look for these bullish breakout patterns as continuation patterns, and that will bring a high probability setup to form. Okay, so if you get a bullish close like this with volume, okay, it's a setup. It's a nice setup, but it's not high probability because you're lacking a pattern. You don't have a breakout pattern. Okay, I mean, if anything, if we really wanted to, Fubo is just trading in an upwards channel right here. Okay, as we can see right here. Maybe you can make the argument, hey, it's in a rising wedge pushing key resistance, blah, 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 if you wanted to make that argument. Okay, instead, what we get from the 6th to the 8th is a bull flag for Fubo, bull flags for 2 days, and it runs up into close with volume. Okay, that's what separates these two setups with high volume. One has a bullish breakout pattern, the other one doesn't. Arguably, maybe it's in a bearish pattern, but I wouldn't have swung puts based off of that close either. Okay, so definitely utilize this to your advantage. Don't forget that 2 to 3 touch rule. If you don't know what the 2 to 3 touch rule is, look up in this channel where it says Charting 101. That video, I go over this 2 to 3 touch rule in depth.